stock market has went down by more than 10% in past 6 months. But in past few sessions, it is showing some signs of recovery. Now the investors are in dilemma that whether they should buy, hold or sell. But before we answer that, let's assess the full situation with historical data and understand how market has performed in past with crashes and situations like this. In 1992, Harshad Mehta Scam got exposed and market went down by nearly 56% from April 1992 to April 1993. But again, in nearly 2 years, market recovered back and went to newer heights. Again, during Asian financial crisis of 1997, Indian stock market also got hit and Sensex went down by nearly 28% in December 1997. But once again, market took 1 year to recover back and reach newer heights. Then in 2000, dot-com bubble burst happened when tech companies, which were then very highly valued, failed to deliver profits. From February 2000 to October 2001, Sensex plunged over 43%. But once again, investors slowly started shifting to other sectors and market recovered back. In 2004, Indian stock market again went through a shock after unexpected victory of UPA. Sensex went down by 15% in one single day on 17th May 2004. But once again, in 2-3 weeks, market recovered back and went to newer heights. In 2008, the collapse of Lehman Brothers and subprime mortgage crisis in US triggered a global financial crisis. Indian stock market also got hit and the Sensex went down by nearly 60% from January 2008 to October 2008. But once again, after stringent financial policies, the market recovered back in 2009. In 2015, Chinese market crash, commodity price declines and domestic NPAs caused Sensex to fall by 24% from January 2015 to February 2016. But once again, market recovered back in 12 to 14 months. And lastly, in 2020, during COVID-19 pandemic, the stock market went down by nearly 39% from January 2020 to March 2020. But once again, because of very strong fiscal and monetary policies, investors saw V-shaped recovery, and by the end of the 2020, market was back on track and it reached newer heights. So as you can see, in the long run, market does not stays where it crashed and it eventually recovers. So whether you should buy or not will totally depend upon your portfolio goals, timelines, and the choice of stocks and many other factors. But one thing is for sure that if you have fundamentally correct stocks whose macroeconomic conditions has not changed, then you don't need to panic, because as we saw, in the long run, market recovers and goes back on the track.